Welcome back. Today, we're diving deep into the latest earnings report from a true retail giant, Walmart. And let me tell you, they just posted some seriously impressive numbers for the third quarter. We're going to break down exactly how they did it, what's really driving their success, and, what it all means for the future of retail. Okay, let's get into it. So, what's the big headline here? It's pretty simple, actually. Walmart had a fantastic quarter. They beat expectations all across the board. And get this, they're so confident in how things are going, they've actually raised their forecast for the entire year. This is really a story of strength and a whole lot of confidence.
And hey, you don't just have to take my word for it. Let's look at what the CEO, Doug McMillon, had to say. Right away, he's pointing to a few key things, right? Strength across the entire business. And this is a big one, the explosive growth of e-commerce, and just solid, smart fundamentals, like gaining market share and managing inventory. So let's see if the numbers actually back him up.
And here we go. This slide gives us a great snapshot of that performance. Total revenues are up a really solid 5.8%. But the real story, you gotta look at the right side. Adjusted operating income and adjusted EPS are up even more. We're talking 8% and almost 7% respectively. You know what that tells us? It isn't just about growth, it's about profitable growth. That's the magic right there.
All right, so how did they pull this off? Let's dig in a little deeper, look at the core financials, and see the big numbers that really powered this amazing quarter.
First off, just take a second to look at the scale of this operation. Total revenue for just one single quarter was a staggering $179.5 billion. That's a 5.8% jump from this time last year. That is the kind of growth that makes everyone sit up and pay attention. And this chart just brilliantly illustrates the point I was just making. When you take out the weird effects of currency changes, that's what the little cc means, net sales grew a super healthy 6%. But look at that middle bar. Adjusted operating income grew by 8%. When your core profitability is growing faster than your sales, it means you're becoming a more efficient, more effective business. That's a huge win.
And just so we're all on the same page, what exactly is this adjusted operating income thing? It's a really key metric. It basically shows you the profit a company makes from its normal day-to-day business, before you get into things like interest and taxes. It smooths out any weird one-time accounting quirks. That 8% growth tells us the core business is absolutely firing on all cylinders.
So what's lighting that fire? Where is all this exceptional growth really coming from? Well, the answer is overwhelmingly clear. It's e-commerce.
27%. That's the increase in global e-commerce sales. That is a massive leap. And it wasn't just in one market either. The report says that every single one of Walmart's business segments saw their online sales grow by over 20%. This is a company that is rapidly and successfully transforming into a digital powerhouse.
And believe me, this isn't happening by accident. This is a clear, multi-part strategy. They're using their physical stores for pickup and delivery, which is brilliant. Their own advertising business, Walmart Connect, is just soaring. And they're getting faster and faster. Deliveries in 3 hours or less jumped 70%. They are building an entire ecosystem, all built around convenience.
Okay, let's get a little more granular now. How did the different pieces of the giant Walmart empire actually perform?
The story is strong pretty much everywhere you look. In the US, sales were up over 5%, with that incredible 28% jump in e-commerce. But then look at international. Sales grew more than twice as fast, up over 11%, led by huge markets like India and China. So you've got this 1-2 punch of domestic dominance paired with massive overseas expansion.
Now this quote from the report, this is so important. Walmart is gaining market share not just with its traditional customers, but specifically with upper-income households. This signals a major shift. It means they're successfully appealing to a more affluent shopper, one who's probably crunched for time and really values the exact convenience and speed we just talked about. Fast delivery, easy pickup. This just expands their total market in a big way.
And of course, we can't forget about the other piece of the puzzle, Sam's Club. Their membership model is absolutely thriving, with income up over 7%. And just like the main Walmart brand, their e-commerce sales are booming, up 22%. It's just another powerful and consistent engine humming along for the company.
Okay, so after a quarter this strong, it's really no surprise that Walmart is feeling pretty optimistic about the future. So optimistic, in fact, that they've officially upgraded their forecast for the entire year.
This table really tells the whole story. Look at the net sales. They've raised their growth expectations pretty significantly, from a range of 3 to 4% all the way up to nearly 5%.
They also boosted the low end of their operating income forecast and bumped up their earnings per share guidance. This is management sending a very clear signal of confidence.
So here's the key takeaway from all this. This isn't just about one good quarter. By raising their guidance like this, Walmart's leadership is basically telling investors, hey, we believe this momentum is sustainable and our strategies are working even better than we first thought. And all of this leaves us with a really fascinating question to think about. With its massive physical footprint now being supercharged by a 27% growth in e-commerce, fulfillment speeds that can rival pretty much anyone, and a booming digital ad business, Walmart is clearly evolving. So, is it time we stop comparing them to other big box retailers and start seeing them as a true head-to-head competitor to Amazon? Because that's the strategic battle that's probably going to define the next decade of retail.